when you're looking to buy a home and you're doing research, there's a lot of misinformation out there. And I've had quite a few home buyers come to me, especially in the last few months, that have misconceptions about the process. They also have misconceptions about what it takes to buy a home. So in today's full video lesson here, I am going to share with you the biggest myth and the biggest misconception that I see from home buyers today. Hey, it's Robert Weinberg, and on this channel we empower people to take control of their futures through expert mortgage and financial strategies. In today's lesson, we're going to be talking about the biggest myth and misconception among home buyers, especially first-time home buyers. And we're really going to be focusing on primary residence in this lesson, which means a house that you're going to live in as your full-time residence. The myth that we're talking about here is the down payment requirements to buy a home. There's really two camps of people. There's one camp that says you have to have at least 20% down to buy a home. And there's another group that thinks you don't need any money to buy a home and you can just show up to a mortgage lender, show them you have a job and a pulse, and get a house without writing a check for any money. And both of these are absolutely wrong, and I'm going to show you why here today. Understand that the typical first-time buyer in the United States in today's economy in 2020 is putting down anywhere from 3.5% to 5% plus the closing costs. And that plus closing costs is really important because a lot of first-time buyers forget to account for closing costs. They figure, hey, I've got 3% down, where do I sign? How do I buy a house? But that's not the only thing to consider. You need to have money to buy or to put towards closing costs in addition to that down payment. So what we're talking about here is anywhere from 3 to 5% that you'll need towards closing costs in addition to the down payment. And the reason it's 3 to 5% is because depending on what area of the country that you're living in, the closing costs vary by state and by county. So you need to talk to a lender to have them do an estimate and figure out really what a good ballpark is for you to have saved towards closing costs. There are a couple different ways to pay closing costs, as we'll talk about in a second, some different strategies you can use, but worst case scenario, you do want to prepare to have that 3 to 5% available in addition to the down payment that you're going to put. Let's talk about some different loan program options. So everyone really wants zero down, but there's very limited options for zero down. The reason why is because many years ago when I started doing this, about 17 years ago, there were a lot of down payment, zero down options. A lot of people did buy houses with no money down, and they ended up getting foreclosed on, hence the housing crisis. So there are very limited options now for this zero down. The two main options are going to be a USDA loan with the Department of Agriculture or a VA loan with the Veterans Administration. And while these are both amazing programs, most people don't get these loans, as we'll talk about here. So the USDA loan, there's a few restrictions. Number one is geographical restrictions. You can't get a USDA loan anywhere in the country. It has to be a specific area that the USDA and the Census Bureau has deemed as an area that they want to stimulate home buying and stimulate economic growth. So they allow those areas to have this zero down option because it will help stimulate that. So you can't find any house. It has to be in that particular area. The second big thing that gets people caught up with USDA loans is that there's an income limit. Not anybody can get these loans. You have to make less than a certain amount of money, and it is determined by the median income in the area that the property is located. So you six-figure earners out there are probably not going to qualify for a USDA loan unless you're in a very high-cost area. VA loans. Now, it's my belief that VA loans are the best loan in the country if you can get one. The reason that it's difficult is because you have to be a veteran of the U.S. military, and most people aren't. You have to be an eligible veteran of the U.S. military, which your mortgage lender or mortgage advisor can determine very quickly by getting a certificate of eligibility through the VA. Most of the time, we can get it instantaneously through the VA website. The reason why a VA loan is the best loan, in my humble opinion, is because, number one, zero down option. Number two, the interest rates are phenomenal on these loans, many times lower than any other loan available. And number three is there's no monthly PMI or mortgage insurance, which is pretty much going to be required anytime you are putting less than 20% down on a property. So for those reasons, a VA loan is awesome if you are an eligible veteran. I highly recommend that you get a VA loan. But as you can tell here, these zero down options are very restrictive and they're not for everyone. So what other options do we have? Well, we also have 3% and 3.5% down. But going back to the zero down, again, it's not zero money out of pocket, it's just zero down payment. You still have to come up with that money that we just talked about towards the closing costs. So be prepared for that. Now, the 3% down conventional loans are awesome. There are a few different options that you have there. A Home Possible loan through Freddie Mac, a Home Ready loan through Fannie Mae, and a Home One loan also through Freddie Mac. Now, these loans will let you put a very low down payment, like I said. They determine this based on if you're a first-time buyer. So if you're a first-time home buyer, it means you haven't owned a home in the last 3 years, and you can typically qualify for these type of loan programs. There are income restrictions on Home Possible and Home Ready, but there's not on Home One. So there are, different ways around it if you have a knowledgeable mortgage advisor that can place you in the right loan program for your needs. And a very common loan option for first-time buyers is a 3.5% down FHA loan through the Federal Housing Administration. There's no income limitations on this. The interest rates are very favorable on these loans, and they only require a 3.5% down payment. You can start to see why in watching this video here that it's so important who you work with. It's so important that you have a mortgage advisor that has access to all these different loan programs. If they only have access to one loan, then they're going to just try to throw you in at 5% down or 10% down, and that's it. You want somebody that's going to guide you through this process, take your scenario, and be able to place you into the right loan for your particular needs. Now let's talk about different ways and strategies that you can use to come up with money for closing costs if maybe you're a little bit short. So number one, as I've talked about in my other video of the top 3 ways that you can use to pay for closing costs on a home is gift funds. So you can use an eligible family member, it has to be a blood relative, and they can gift you money towards your home purchase that can be used towards down payment and closing costs. So that's an awesome way a lot of my first-time buyers do use for this type of transaction here. Another way is seller concessions. This is where the seller will actually chip money into you as the buyer to your transaction to help you pay for closing costs. Now, the seller concessions can only be used for closing costs. Depending on the loan program, it typically ranges between 3 and 6%. On an FHA loan and VA, you can actually get up to 6% towards the closing costs, which can cover all and then some of the closing costs. Usually, though, I see these are like maybe 3 or 4% of the price of the home that they're chipping in towards closing costs. If you can get any money from the seller, even a 1% or $1,000, a couple $1,000 towards closing, it's that much less money that you're going to need towards your home purchase. And it can be a huge barrier that can be overcome, but you got to have an expert realtor guiding you to get these seller concessions, because this is part of the negotiation of buying a home. If you don't ask for it, if you don't have somebody guiding you that's going to understand how to get this stuff in your contract, then you're not going to be able to receive it. And the last way that you can use to help pay for your closing costs on a property is going to be lender credits. And it really bears talking about in this video because it's not really widely used. It's something many people, even seasoned professionals, don't see a lot. And the way a lender credit works is that your mortgage lender can give you a above market interest rate, and in exchange for you taking that above market rate, they can then turn around and credit you money back towards your closing costs. Now, it's not common for that to cover all of your closing costs, but a typical lender credit could be anywhere from 0.25% to maybe 1 or 1.5% of the price of the home. So it can definitely help to cover maybe a quarter or half of your closing costs if you're a little bit short. Now, lender credits can't be used all the time because you do have to qualify for that higher interest rate to offset the lender credit. So if your debt to income ratio is really tight, you may not have that option. But hopefully in watching this today, it's giving you some motivation, it's giving you some strategies, and it's giving you and dispelling these myths. The big myth here about down payments when you're purchasing a home. So I really hope you found value in today's lesson. I hope that it's given you that insight that you're looking for. And if this is your first time watching us, please go ahead and hit the subscribe button and also click the bell so you get notified on all of our future content, which we put out every single week. If I can be of assistance to you or anyone that you know, please reach out to me. I'm licensed in the states of Connecticut, Massachusetts, and Florida. You can reach out to me via private message on social media. You can reach out via text, or you can call me directly. All my contact information is readily available on YouTube, on the internet, and on all my social media sites. Again, hope it helps, and we'll talk to you soon. Take care.